ladies and gentlemen, ladies and gentlemen. Thank you, thank you, thank you, thank you, thank you, thank you, thank you. Welcome to the show, welcome to the show, welcome to Chat Room with Max. It's a beautiful Sunday. Today we have a very, very interesting show lined up for you. In fact, today is a show like no other because, like you saw on the intro, we talk about educational topics, we talk about business topics, we talk about medical topics, we talk about normal life, funny things, everything. Today we're going to be talking about business. We're going to be talking about a life decision making topic. And to do justice to today's show with me will be two great professionals. Oh my God, if you let me not waste time. Let me not waste time. Let me know. Audience, are you ready to welcome our special guest for today? But before I bring them in, let me tell you about the topic we're going to be talking about today before they join in, so that you know you are included, you are informed. All right. Before I tell you, please and please, let's do as we always do, okay? Like where you're watching this from, subscribe to this channel, hit the notification tab so you know just when we're on, and lastly, share, because sharing is caring. We need to educate the world, one person after another. Let's take it that way. All right. So the topic for today is going to be Africans and life insurance / taxes. Africans and life insurance / taxes. A lot of people were like, Minister Max, why did you put "I will not die in Jesus' name"? Well, you'll get to find out soon. You'll get to find out very, very soon. So with me, let me introduce the first person. This person is no other than my wonderful tax. I call her my tax lady on my phone. It's saved as my tax lady. She's the one that does my. Let me not say it so people will not go and find out how much we make, that kind of thing. But she's my tax lady. She actually has inspired me a lot when it comes to, investing and all those things. So ladies and gentlemen, welcome. Audience, are you ready to clap for her? Welcome, the one, the only, Taiwo, everybody. Audience, come on, do your job, audience. Okay, let's go. Welcome to the show. Welcome to the show, Taiwo.
Thank you.
Yes, the one and only CPA that I know.
Thank you for having me. I'm excited to be here, Minister Max. Thank you.
We're glad to have you attempted to call me by my real name, Abi. This is chat room. Yes, we're glad to have you in the chat room today. It's been a long time coming. We've been planning this for some time now. So, ladies and gentlemen, if you're watching back home, please don't forget to share this. Don't forget to subscribe to the YouTube channel you're watching this from. And lastly, just tell all your friends, your enemies, your loved ones to come in here and learn some things that they might not have heard about in the past or ever. Okay, so this is Taiwo Agbaje, everybody. She's a CPA. Can you please tell us what a CPA is before I come and say something else?
So a CPA is a certified public accountant, and it's the highest certification for the accounting profession in the United States. And that's just the simple way to kind of introduce, to tell you what the meaning is.
Perfect. Okay. We'll come more into introductions with you after we invite the one and only Habib. This guy is how am I going to qualify his position now? You will get to know him. Ladies and gentlemen, welcome the one, the only Habib. Welcome, Habib.
Welcome. I'm very happy to be here.
Yes.
It's a pleasure.
Yes. Welcome to the show, sir. You're welcome to the show. It's nice to have you in chat room with us today. We are eager to learn from you. In fact, the moment I posted the flyer out there, a lot of people were like, oh, please let me know when the show is going to be on because I want to learn a lot about life insurance and taxes. So let's get the show rolling. For those of you just joining right now, please do us a favor by commenting on the comment section. Ask your questions when you have questions about what they are saying, because this is an educational moment. We're going to teach. They're going to teach. and we're gonna learn for like almost 50 to an hour. Okay, so just keep your mind open and don't go anywhere. Share, share, share. All you should be doing with your phone right now is sharing, liking, commenting, and other things you want to do. But first of all, just let us know where you're watching from. Type your name on the comment section and let us know where you're watching from so we can say hi to you. Okay, so while we wait for, okay, we have a comment. We have Asam Winifred. She says, "Hi, Minister Mex and the crew. Welcome, Winifred." So yes, we're gonna begin with introductions right now. Let's start with Taiwo. Taiwo, can you let the audience know who you are, what you do for a living, before we kick the show rolling?
Yeah. Thank you, Mr. Mex. My name is Taiwo Agbaje. I'm a CPA, a certified public accountant, which is the highest accounting certification in the United States. I work with small business owners in the United States to help them, grow profitable businesses, reduce tax liability, and of course, increase their wealth. I'm located in the Austin, Texas area, and we currently serve clients across the United States. A big part of our client niche is the real estate investors as well as the home care agencies. We also work with other industry as well, as long as they're a good fit for us. But our goal is to ensure that every taxpayer does not pay more than their fair share in taxes. We also help them put structure and put processes in place. And when I mean processes, I mean financial process as well as structure so that they can run their business in an efficient and profitable manner, and they can continue to grow wealth as they increase their cash flow.
Hmm.
I'm excited to be here today, and I'm happy to share my knowledge with you today. And looking for an exciting moment this afternoon. Thank you.
Nice, nice, nice. We are eager to learn from you and Habib today. As I said earlier on, guys, today is an educational moment. Okay, so get your notepads or your notebooks or your tablet. I don't know what they use these days. Tablet, whatever. Just get it ready to take notes. Okay. All right. We have some comments coming in. We have Anima Shaon, Victoria in the house, everybody. She says, Victoria Oshi, she is from Arlington, Texas. Welcome to the show. Welcome to the show. Please subscribe. And we have Mr. Eugene Opala in the house, everybody. He says, hi, chat room, watching from Jos Plateau State. God bless you. Welcome, welcome, sir. We have Healthy Jessie Chops, aka Jacinta, in the house, everybody. She says, good evening. Jessie Chops Jessie Worth watching from Nigeria. Happy Sunday to you all. Yes, yes, yes. Thank you very much. Habib, can you just let us know a little bit about yourself before we begin to talk, before we begin the heated questions and heated topics? Please, just as the show goes on, just type your comment on the comment section, your questions, and the one side for you. So, Habib, please let us know a little bit about yourself, sir.
So, my name is Habib Meite. I am a licensed financial professional helping families all over America. I am based in Houston, Texas, but I do travel all over the country to help families with protecting families when it comes to life insurance and also structuring a good retirement plan for families. There's a lot of information in America that are hidden. Unfortunately, unless somebody points you to the right material or you sit down one on one with the right professional, there's no way for you to find out about that kind of information. So, right now, I'm even in Maryland. So, traveling all over the country, educating families, helping families protect themselves, their loved ones, helping family better strategize their retirement such a way that when that time comes, they have money and they can maintain the lifestyle and always take care of themselves. And in case they have to go to be with the Lord, at least they can leave something to the children. And then, like we say, people from here do not cry like people from our community. In
Yeah.
our community, when something happened, then we roll over because it's the end of so many things. But when things are better structured, then at least you have hope for the future and the family can keep moving and
Yep.
forward. So definitely this is what I do, and I'm very happy to be here.
Wow, 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 wow. Thank you very much. Guys, are you guys ready? Like it's gonna be lit. It's gonna be lit in here. Thank you very much, Habib. Thank you very much. So, right now, guys, as we said, okay, when they're talking, please type your comments in the comment sections, your questions, so they can answer it, okay? And after the live show has aired, just you can still type your questions and I will send it to them and then they will answer you and I will forward the answer in the comment section. It's gonna be fun. So let's begin. Who do I start with? Let me start with Habib. Let me start with Habib. In fact, I'll start with both of you. Let's start with both of you. So we're all Africans, and we know how it is with Africans. We know that when you say life insurance, when you say life insurance, the first thing that comes to people's mind is death. When you say life insurance, are you planning on killing me that you're talking about life insurance? Why are you talking about life insurance? So, what are your experiences so far from your conversations with Africans and life insurance, the topic of life insurance? Anybody can go first. Tawo, you want to go first? Let's let the ladies go first.
Yeah.
Yeah, absolutely. Thank you. Yes, life insurance is something that is very it's not often discussed within our community, and that's because it's more like a taboo conversation. Nobody wants to die, right?
Mm,
And so when you begin that conversation with your clients or with your friends, asking them about life insurance, the first thing that comes to mind is, oh, I'm not going to die now. This is not, I'm going to be 100 years before I leave. And so immediately what they do is they try to end the conversation. But you and I know that death is inevitable, right? Everyone is going to die, and it is very critical for us as Africans or even as individuals to have a plan for our families, to kind of think about not just ourselves but also the people that we love, our loved ones. What happens to them after we are gone? You and I know that sometimes we've seen scenarios where someone could go out and before the end of the day they are no more, right? So that doesn't give us a timeline by which we're going to be here. So it's very important for us to kind of reorientate ourselves, like look at the get enough information about life insurance. No one is asking you to die, no one wants you to die, but as Africans we need to kind of tap into the resources, tap
mm,
into the opportunities that are out there. A lot of the millionaires here in this country are utilizing life insurance. They have insurance that covers everything about their family, that makes sure that even after their demise, their family is structured, is well and able to run. So we need to have an open mind to at least listen to what we can get out of it and see the potentials for us as an individual. One thing that I have also observed is that oftentimes people might think, oh, this is something that I'm not going to benefit. It's going to benefit someone after I've gone. Is there any alternative where they are leaving benefits to that life insurance, right? And so those are some of the things that Abib is specialized on. He is a very good professional as well as myself. And we have also worked with other families as well to help them set up life insurances as well, just so that we carry everybody along.
yeah.
Africans don't want to be left behind. We don't want to be at the back end of things anymore. We also want to be at the forefront of things happening. And the more information we have, the more access to resources and professionals, the better we're able to prosper and leave generational wealth for our families. I think I'll stop right there.
Okay, thank you very much. Habib?
Yeah. So definitely, when it comes to life insurance, in our community, when they hear life insurance, they'll automatically run away. Oh, this
Mm,
guy is talking about life insurance. You want me to die tomorrow, right? Because unfortunately, the only kind of life insurance we are aware of is the one that's only good for death. While nobody ever asks themselves the question, why is it called even life insurance? Life insurance is all about life. There's different kinds of life insurance. There's
Yeah.
the one that's only good for death. There's the one also that benefits you while you are alive. And there's many others. Unfortunately, in our community, we are only familiar with the one that's only good for death. So we don't see the value. Why will I pay attention to something that I will not see the value? It only benefits people when I will not be around anymore. So this is the miseducation in our community. And we are here really to bring the whole scope when it comes to life insurance, the whole knowledge to our community, to let them know that there's also a different kind of life insurance called the cash value life insurance that can not only protect their income while they are alive, they can also benefit them many ways while they are alive. And then we'll be more than happy to share more to people of our community about this kind of life insurance. It has been leveraged by the elite in America for so many years. Unfortunately, like I said, unless somebody points you toward the right information, there's no way for you to find out about it. So this is the reality in our community. Unfortunately, we are only aware of the one kind of life insurance, the one that's only good for death, while
Yeah.
there's many others that can allow you to strategize your retirement, better plan retirement, protect your income while you are alive. Things happen to you, you all have money coming in, and so on. So this
Okay.
is the reality out there.
Wow. Okay. So tell me, can you tell us the different types of life insurances that are out there and what they actually
The
achieve? Like what
achievement.
how can they benefit an individual?
Okay. This is a very good question. There's four types of life insurance in the world, in America especially. Some other countries are really applying the same strategy like in the US. So please refer yourself to what is out there in your country. But in the US, there's four types of life insurance. We have group life. This is the one you have at work. You have term life. This is the one that's always advertised on TV. You have whole life, and you have the cash value life insurance, commonly called the Index Universal Life. America tax code 7702. Now, let me dive a little bit into each of them. Group life is the one you have at work. When as long as you have a job, the company covers you. But when you leave your job, that's it, you're not covered anymore. A lot of people in our community, we talk to them about getting protected. They know they have something at work and they assume that they are fine. Sad story, but true. We have somebody out of the community in Savannah, Georgia. It was hospitalized for 20 months before going to be with the Lord. So after 6 months, let's say you were in the coma, that's what happened to him. After 6 months of not clocking in and clocking out, being in a coma, what do you think happened to you? The company had to let him go.
Wow.
So by the time he went to be with the Lord, he wasn't an employee of the company anymore. So when he passed away, his wife went to the company where he was working at and said, "Oh, I know my husband had a policy here. And this is the last company he worked at. Can you please guys pay me the money?" They said, "Mom, you are correct. But by the time your husband went to be with the Lord, he wasn't an employee of this company anymore. We let him go." So unfortunately, they didn't pay anything, and we had to set up a GoFundMe to try to raise funds to support the family. So the one you have at work, group life, is not yours. Most of the time, for it to pay, you have to die at work, or make sure that, like an angel tells you it's your last day. Make sure you're at work, right? Which is less likely to happen. And there's
Wow.
term life. Yeah, term life is the one we are bombarded days and nights on TV, at the bank, on the billboard. Life insurance, life insurance. For 9.99, you have life insurance. We are bombarded, bombarded, bombarded everywhere. So as soon as your life insurance, we're tired of it. But the reality is term life is only good for death. And that's the one we are bombarded all the time with. So everybody think, I always say that term life is a guilty one. It's guilty to the fact for to miseducate people and letting them know think that life insurance is only for death. And we are bombarded every day. It's just good for death. And if you miss a payment, it lapse, and most of the time is only valid for 30 years. At 65, it doesn't cover you anymore. But it's most likely that you're not gonna die at 65. People live longer than that today. Whole life and covers you into 100 years. It's more expensive, and then you get the death benefits without cash value. And there's what we call the family miracle, just to cut it short, which is called the Index Universal Life, America Tax Code 7702. It's a tax code. I challenge everybody on the line tonight to have a check. This is the one that builds you you are alive in an index account that capture the gains of the markets when the markets go up. When the market crash, you are protected against the volatility of the market. So you make money, you never lose money. You don't have to worry about the volatility of the market. So the money you put in the life insurance grows for you. You can take out money out of it. It
Wow.
also protects you. God forbid anything happen to you, you get heart attack, stroke, cancer, or in a car accident. It pays you money while you're alive. Somebody in our community was paid $247,000 while they were alive to maintain the lifestyle, and it have so many more benefits. But the thing is, you really have to find the right person to structure it correctly for you, and that's where we come in and help families structure it correctly.
Wow, 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 wow. Okay, we're gonna ask some more questions about the best one to have, how expensive the
Mhm.
best one is to have, and can a person have like multiple in a household? But before we ask that question, I want our tax expert, Taiwo, to please tell us how does this life insurance intersect with tax planning? Is there any advantage? Just talk to us about that.
Yes, that's a good question, Minister. So generally, life insurance is it depends on where you're coming from. It depends on if you are making a contribution as an employer or if you're making a contribution as an employee or as an individual. For those that have businesses, small business owners or employers that have employees working for them, life insurance could be structured in a group policy, just like Abib mentioned, where every employee in the company is provided that additional fringe benefit for work. Now, those expenses are deductible expenses for taxes. They are expenses that you can offer that can help you save on taxes. So when it comes to tax planning, a key aspect you have to understand with tax planning is that the more expenses you have, the lower your taxable income and the lower your taxes. So tax planning starts from, I always tell people that before you even start going into the complex world of tax planning, look at the expenses that you can optimize within your business, within your portfolio, and see those expenses that are deductible for tax purposes, and make them legal in a way that you can deduct them. So that's one thing that life insurance can do for an employer. If you offer that to all your employees, you can deduct that as an expense. As a business expense towards your taxes. So that's one thing. Another part that is very critical is for the employees on the other side for the employees. A lot of us want to put money in life insurance, but the key things that you have to understand is number one, if you're putting money in life insurance, just like Habib said, most of those contributions are after tax. What I mean by after tax is that you would have paid taxes then. So it's not like it's not a direct deduction from your employer, right? Your employer is not the one putting the money. You are contributing out of your after tax money into that fund. And so because you've paid taxes at the beginning, when you make a withdrawal down the line, maybe your beneficiary does make a withdrawal, or even yourself, you make a withdrawal down the line before you pass, your withdrawal is not taxed, right? Because you've paid the taxes, you're using after taxes. The money that you're putting into that fund has been taxed already. So in the future, when you're taking money out, you don't pay taxes on that. However, what you pay taxes on is interest. So let's say, for instance, you added $100,000 in the fund over a period of 20 years, and say you want to take a withdrawal, or maybe your beneficiary, or maybe after an individual passes and you want to take a withdrawal from that fund, the $100,000 is not taxed. But if that money had been invested in the market and it had generated some kind of return on investment, it's about $20,000 extra. The point that the fund is now worth $20,000. The $20,000 on top of $100,000 is taxed. Okay, so don't forget that that's going to be like an interest. It's an interest that was never an interest that you earned on that fund, but that had never been taxed before. And you know that IRS doesn't play with your money; they're going to tax everything, right? So that extra interest that you generated from that fund will be taxed at withdrawal. Okay, so that's the impact. So again, when it comes to tax, it's very important for individuals to know this. I've seen people ask me, if I put money in life insurance, can I deduct it for taxes? Right? And the answer is, for currently, if you're putting in your after tax, it's not going to, you already pay taxes on it. So it's not like it's however, in the future, it's going to be paid tax. So I see it more like a tax deferral mechanism. I also see it as an investment driver. So it depends on how you look at it, but that's essentially what impact of it overall from an employer perspective as well as from an employee perspective.
Wow. Wow. Well, thank you. Ladies and gentlemen, we're going to go on a 30 seconds break and then come back and continue with this show.
Hi, so glad you are here with us today in Chat Room with Mex. I am Kay and I hope you are having fun. Please subscribe, like, and lastly share. We need to let the world know what we are enjoying here today in the chat room. Now let's go back to the show.
Well, welcome back. Welcome back. I hope you're taking down some notes and I hope you're enjoying what you're listening to from these great minds, Taiwo and Habib. We're going to go back to Taiwo and Habib right now. But before we do that, please and please don't forget to like where you're watching this from. Do not forget to subscribe to this channel. Don't forget to hit the notification tab so you know just when we're on. And lastly, please don't forget to share, okay? Listen, if you have a young friend out there that you know would benefit, in fact, even if you don't know you will benefit, as long as you have a young person out there, someone your age, or even an older person, share this link to them. Let them learn from this, because from what these guys are talking about, everybody needs to be on this. That's the way to like prepare for your future. Okay, so let's go back to them. Habib, sir.
Yeah.
So my question is this: if I get you right, there is a particular kind of life insurance that we can use as our investment bank. I don't know if I'll put it that way.
Yeah.
If we can use as an investment bank. And is that the best kind of life insurance? If that is, when and how can people take out money from it? And how expensive is it to pay for every month if it's monthly?
Yeah. So that's a very good question. So just to say, to agree with you, is actually there's a life insurance that act like an investment, but the government doesn't want it to be called an investment because it's tied to life insurance. Just because it's tied to life insurance, we as financial professional cannot call it an investment. The people can see it on their own, right? But like you said, everybody, there's something for everybody. You can design this life insurance yourself. When we sit down with you, we make sure that if you want a $1 million policy based on your age, it will cost a certain amount per month. But at the same time, the money that you contribute to this plan also, don't forget, grows by compound interest for you. So some people would like a $3 million policy. Some people would like a $1 million policy. Some people would like a 500,000, 250,000, or 100,000. But it's all based on need-based analysis. So we run a need-based analysis based on your household. What would you like to leave to your children? What would you like to have at retirement? How much? Some people would like to retire on $50,000 every year. Some people would like to retire $120,000 every year. So those are plans that we can structure. And just to add to what Taiwo said, talking about taxes with this account, cash value life insurance, you can take out money tax on top of, you can take out money out of the account. Now, if you take it as a withdrawal, then you pay taxes on the interest. But there's a loophole of the rich, which is another benefit of the cash value life insurance that allows you to take out money tax free. So for 30, you can have that accumulated $30,000, $50,000, and be able to take out that money absolutely tax free. This
Wow.
is one of the reason why you would never heard of this on TV, the cash value life insurance. Because when you talk about taxes, you're talking about government money, right? So the government puts strict restrictions on those kind of life insurance to limit how we can share about it. The only way you can hear about this kind of insurance is one on one or to a show like this, but you would never see that on TV advertised because of that tax feature. The fact that people can put money, take out money tax free out of it, and also design whatever plan makes more sense to for the household. And I'll have a short story. Um, Scott, there was a story of Scott. Scott took a $400,000 policy, and I think it was around 38, and he was contributed around $250 a month in his plan. And after 7 months of contribution of his plan, he got heart attack. He was walking in the neighborhood with his spouse, exercising, and he has heart attack.
Wow.
But since heart attack is part of the living benefit, you don't need to die to benefit. One of the company that we work with, that he had the accounts with the $400,000 policy, paid him $353,000. The check was paid to him while he's alive, just because he had the right kind of account. So when the rich get sick in this country, they get richer. And when
Yeah.
we get sick, poverty comes into the house because we don't have the information. And there's something from everybody. You can design something that makes sense. Even for a price of a cheeseburger, you can still design something for yourself.
Wow. 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 Huh. Okay. Can we just let's do a brief sample, an example for the audience, right? Say
Mhm,
I want to get a life insurance policy, and
mhm.
I am meeting you. I approach you as my agent. Can you just walk us through how we can determine which one is the best value for me?
So, so what we will do first, we will sit down and I will educate you on all the financial portfolio in America. Means all the accounts, checking accounts, saving accounts. We talk about compound interest, which is the eighth wonder of the world. How money can grow. The different brackets in America. We have a fixed. America money grows three different ways in America: fixed, variable, and index. Fixed is what you and I have by default, the
Yeah.
checking account, saving account. You do not lose money, but you don't make money there too. Variable, this is where you have your 401k, stocks, and so on. You have a good growth potential, but you make money, you lose money, like a EKG machine. You have no clue what the market's gonna be 20 years from now when your retirement time arrived. You have during COVID time, people lost 50% of the portfolio. I met this retired colonel from the Air Force, Bob. He said, Habib, I was a millionaire until 2008 happened. And when the market crashed in 2008, I could see all my portfolio vanish all the way half overnight, and no more years for the markets to go back up. So I educate people on all the buckets, the volatility of the markets, the fixed, and also the index bucket where you make money. And when the market crash, you are protected. You never lose money. We also talk about probate court, which is in America when somebody goes to be with the Lord, all your accounts are frozen. They are subject to the probate court because who's going to pay for your car loan? Who's going to pay for your debt? You haven't paid your electricity bill yet, maybe your mortgage and so on. When you are alive, those are called bills. When you're not around, they're called estate. So we educate people on the accounts that can protect them from all those things that are out there. Right now, the owner of the application Cash App, I don't know if you're familiar with Cash App,
Yeah, yeah.
an app that everybody uses in the US. His account he was shot, and his account as I'm speaking right now, $10 million are frozen in probate. The
Wow.
family cannot have any penny, and they are raising $10,000, $50,000 trying to pay the bills. It's sad. It's on GoFundMe right now. The same thing happened to T'Challa from the movie The Black
Yeah,
Panther.
Black Panther.
His account was frozen for 2 years before the family got any penny. So after educating somebody from our community like this, then I'll show them the different type of life insurance, and then they can make a decision. If they want term life, I can help them with that. I show them the advantage, the disadvantage. If they want the index universal life, which is the Lamborghini, I would say, or the iPhone 14 of life insurance, then we can sit down and structure something like that. If they want to learn more, I have books. We have books written by experts. Like here, as you can see, Patrick Kelly.
Yeah.
It's a book that I recommend, The Retirement Miracle, that we can recommend to them so they can dive a little bit more into that information. And we run a need-based analysis, but we always educate them so they can make a better informed decision for themselves. Whatever they want, that's what we go with.
Wow. Wow. Thank you. Taiwo, CPA. Before I ask you a question, we have a question from Jacinta in Nigeria. She says, can this happen for those of us in Nigeria? She also says, do we have the policy in Nigeria too?
Yeah, I think I'll take that. There's a life insurance. There are several insurance companies in Nigeria as well, and they all offer different products. And definitely, I know that there is a life insurance policy in Nigeria for those that are looking for coverage. I know when I was in Nigeria at the time, I had a life insurance through my employer as a benefit, and also as individuals there are several insurance companies that have coverage. However, what I would recommend, what I would advise, sorry about that. What
That's
I
it.
would advise is that before you sign up for any coverage, you want to make sure that you understand the policy, and that's because the laws of the land in Nigeria is different from the United States, and so consumer protection is very critical. I don't know how effective how that plays out in Nigeria. So you want to make sure that whatever policy you're buying into, you are able to also get claims when it comes to when it comes to periods that you want to get your claim, or maybe your beneficiary wants to get money out of it. Understand the processes for getting money out of that fund, so that you don't put in money and you're stranded. So the other thing I know they are also in Nigeria to the extent is whole life insurance. Just as we have it here, there's also those two in Nigeria. So you need to be speaking with someone that understands that. The downside of it though is that like Africans, a lot of us don't talk about life insurance. So it's the product that is never really talked about anyway. I don't think I've rarely seen life insurance talked about on Nigerian platforms, because of course nobody wants to die. And so because of that, it's not as profound, as pronounced as we have it in the United States. But I'll say yes, there is coverage for those in Nigeria as well.
Can I add something next to that, if
Please go
possible?
ahead.
I just want to confirm that there's a similar product in Nigeria, because I had a chance to meet a few families from Nigeria that sat down with me to set up the same account here, and told me they were also aware of that account, and one of them even benefited from that account. Life happened to her, and then money was paid to her back in Nigeria. But what I recommend is, so first of all, look for the cash value life insurance and go with A+ rated companies. So if there's any boards that rate those companies in charge of offering that product, make sure that you go with the companies that are on top of that, and go to the source directly to get the information. But definitely, Nigeria is one of the advanced country in Africa where this product is also provided.
Yeah, because we have situations where a lot of people don't actually. And I think, speaking towards what Taiwo said, a lot of adverts are not being done to push or show this actually happening in Nigeria. And to what Habib said, the only kind of life insurance that is being pushed is the one that you benefit when you have died. Hence some people going to fake death, and then other and then wives trying to kill husband, or husband trying to kill wife to try to benefit from their life insurance policies. We have this comment also from Jessica. She says a lot of people have come out to cry because it's not working. The system there is not working at all for them. you know so I believe we need to, I don't know, if there is like an association that kind of oversees this whole life insurance thing, so they can like do a better job to be global and to be more accountable globally. But right now my question goes to Taiwo first. So right now with life insurance policies, that you know about, and people that you know that have benefited from this policy, as a young Nigerian or a young African or a young person aspiring um, to benefit from the top tier life insurance, the one that you can pull out money from, because me, I like money, the one you can pull out money from. Can you use the money for anything you want to use it for? And if you do pull out money from it as a tax specialist, do I pay tax on that money? I know you said something towards that, but do I pay taxes on that money? Does it hit me just like the 401k, that when you take out money, they will take out a huge chunk of taxes? How does that affect me as a person?
I don't know if you
Thank
can
you.
jump.
Okay, so, okay, just going to say something about that real quick.
Yeah.
And then I'll pass it over to you. Yes, that's a good question. One thing I always recommend to people and to taxpayers, to some of our clients, is that if you're thinking of life insurance, I always recommend that for those that have kids, for you to start early on, with your children, because I know there's 529 plan, and which is more structured for college savings and all that. The other alternative is for you to have a life insurance policy for your kids as an alternative to 529. Yes, the 529 is good. Some states give you a tax benefit, a little bit of a credit for 529 contribution, but it's very restricted because oftentimes that fund is used for college or education-based expenses. Although there's been a recent changes to the law, but again, there's still some kind of restriction to it. So you can't just withdraw the money for anything. Now let's go back to the life insurance policy for your children, where the kind of life insurance that Habib was talking about is the one that also adds a cash value in it. So meaning that you can take money out of it. So when it comes to your children's future, you can also have a policy for them that they can withdraw out of it when they get to college. And aside from that, key thing there is that it also grows. It's like an investment vehicle. So the money grows as they go. And the important thing for youngsters, the policy for babies or younger kids are very, very affordable. So the earlier on you sign them on, the better for you, for them. You don't have to pay fees not so exorbitant when you're signing up or opening a policy for the children. Now let's move back to impact. If you have a policy, there are two ways that you can get money out of your policy, out of the fund. It's either you're taking it as a loan or you're doing a withdrawal. I mean, for me, something that you really need the money for, and then you feel like you can pay it back, I always recommend the loan, because that way it's not going to be taxed at all. Yes, your contribution into that fund isn't being taxed because, like I mentioned earlier on, the money you're putting in is an after-tax money. So when you're getting money out of that fund, it doesn't get taxed unless it's an interest withdrawal. If you're not withdrawing, when I mean interest, I mean the return on the investment from that portfolio. So if you're not withdrawing the interest, whatever money you're taking out is not taxed. But just know that it's going to affect your payout factor, the payout money at the end of the policy. So if you took out money and it's not a loan, maybe someone passes out or maybe leaves goes to the world beyond, their beneficiary is only going to get the balance that is left, right? So that's the effect of that. But if it's a loan, the loan doesn't have, they're going to pay it back. So a loan will not incur a tax impact for you because again, you're going to pay it back over time. So oftentimes, people that have life insurance utilize the loan strategy when they need money versus using the total withdrawal because so that it doesn't affect their cash payout at the end of the policy. Does that
Hmm.
make sense? But
Yeah.
one thing I really want to also emphasize is the kids effect. The kids effect is that if you have children that are young and you're looking for alternative ways to get them ahead of their peers in terms of investment, in terms of opening new opportunities and what for them, it's a very good strategy for you to sign them up now so that number one, the premium is very cheap now, and then also they have it grows the cash it continues to increase their cash value over time until they grow. So it's very, very important. But I'll let Abby talk more about that as well.
Yeah.
Right. So, thank you, Taiwo. I think it was well detailed. Just to add on that, I met this ophthalmologist that was trying to help with structuring an account for himself, and he told me, "Oh, I have this," and I set up an account for my son when he was 14, and now my son is almost 38, and he has almost $1 million in the account he can take out 20 years later, just to show you the power of compound interest. And definitely, if you have kids and time is on their side, and you can start now and you'll be amazed of how much they will have by the time they get to 18, 25, and 35. And if long life is your portion, all the way to 121, because it
Hmm.
runs for that long. But just to come back to that subject of tax free and then comparing the index, that account cash value life insurance to
Hmm.
the 401k. So when it comes to the 401k, the government tells you, do not pay money now, and then put it in this account, and when you retire then you pay money. So let's assume that we take a coin, like maybe a Bitcoin, and one of those seeds from that coin, one of the grain for the coin. So the government tells you, plant this now without paying taxes, and then whenever you harvest it on a big plantation, then you will pay taxes. So do we all agree that tax will be higher in the future, right?
Hmm.
Because of all the loan America is taking, everything that we are doing, the stimulus money, it's most likely tax will be higher in the future.
Yeah.
Well, the when it comes to the index universal life, you pay taxes on the little seeds, and then you plant it. Option B, you plant it, and when you harvest it, it's completely tax free. If you were to pick between option A, paying taxes later, and option B, not paying taxes now and harvest for free, what would you pick if I were to ask you, Mr. Mix?
Well, I'll pick the one that I'll pay tax now and then not get to, yeah.
Exactly. While when it comes to the 401k is option A, the government tells you put money now without paying taxes. And when it's time to harvest that big plantation, when tax will be higher, I'm coming from that big pile of money. And while here you can structure your retirement plan, pay taxes now when it's discounted, and at retirement, you can take out money like Tower says as a policy loan completely tax free. Why is it called the policy loan? It's called the policy loan because you are taking out the money from the death benefits. So let's assume that you had $1 million policy, and then 10 years or 30 years down the line, now your cash value and so on, $1 million policy is about 1.6 million. And you want to take out $100,000, you accumulated $600,000 in your policy value, and also those 600,000 are added to the $1 million for the death benefits. So you can take out money as a withdrawal from the policy value, which the interest would be taxes. But if you take out the 100,000 from the death benefits as a policy loan, which is against your death benefits, it means you are not yet dead. The government give you 100, the company give you 100,000, so that if you were to die that year, instead of paying your family 1.6, they would just pay them 1.5, which is
Minus
minus the
100.
100,000 you paid.
Yeah.
And this is the loophole the elites use not to pay taxes. They don't care because they can take out the 100,000 completely tax free, and they don't touch the cash value that's still building compound interest for them over the years. So this is why we say this is a product that is completely tax free, because you can take it out from the death benefits. So
Wow.
yeah.
Wow. I know Taiwo has accused me multiple times of being a fan of learning from the internet, especially TikTok.
Yes.
I like educational things. And so this question goes to you, Habib. I want to just clarify this because I learned this from TikTok.
Okay.
Now, is it true that a person can have that particular the life insurance policy you were talking about, the best one that you can, take out money from? You can have your parents, your children, yourself, your wife, your family members all in that policy, or like have everybody in it, and then it's now serves as a bank where we're paying into it, and then when after a long time someone ends up dying, it comes back in. It's like a bank where you can borrow money from and then put the money back, instead of going to like the normal bank to borrow money with high interest rate. You're just getting it easily from that policy. Is that accurate?
So this is actually accurate. When we called, there's two parts. One part, so the part that I'm not okay with is that not everybody can be on one policy. Each members of the family need to have a policy. Let's say when I sit down with the family and the dad would tell me, I have $1,000 I can save a month for my whole family. Then we will break down that $1,000 for everybody to have their own policy that will build them cash over the years, and it will be like the family bank. Everybody, the $1,000 that daddy has, then will be breakdown for everybody to have their own policy that will grow over the years for them, so that they can take out money out of it completely tax free. They can take out money for down payment of the house. You can use the money to buy anything you want. It's your money. When you make a call to that company, they only ask you two things: would you want it as a withdrawal, or would you want the money as a policy loan? And the next thing, would you like a check or a direct deposit? That's it. That's your money. You can take out money anytime, at any moment. Now, when it comes to let's assume that the dad has a policy for him only, and then he puts money in it. You can add your whole family, different members of your family, as beneficiaries. So God forbid anything happened to me, then my wife is beneficiary of like maybe 50% of the death benefits, my son 5%, 10%, and so on. So you can spread out the death benefits such a way that if anything were to happen to you, the death benefits will be distributed to everybody on your family. So the only time you add everybody on your policy is as beneficiaries of the death benefits. But when it comes to the cash accumulation part, everybody needs to have their own policy to benefit from the cash accumulation part and be able to take out money and put money into it.
Wow, nice, nice. So how young, this question goes to Habib too. How young and how old can a person sign up? So for the children, how young is a child supposed to be before you can sign them up? And for the parents, how old? What's the oldest age that a person can get to register, to sign up for it?
So I would say young as 2 weeks old.
Ah,
See, 0-year-old 2 weeks. As soon as a social security number is issued to the person in the US, and then in your country, I don't know what system is used, but as soon as a number is assigned by the government to that child, that they can apply for it. I've seen parents spending $4,000, $5,000 for baby showers.
Hmm.
Spending a lot of money, not even having a small account like that for the child. Yeah, at the end, you wonder if the baby shower is for the kids or is for themselves, right? They spend so
Yeah.
much money, and then as how old, I've seen people getting approved all the way till the age of 80, 75, 80. So above 80 you can still get approved, but the reality with this is many are called and few are chosen. You still need to qualify for that. It has all those good things, but you still need to qualify. Have you been hospitalized lately? How serious was it? Did you get COVID? Were you hospitalized? So those are all things that will be considered to qualify you. Do you have a critical illness? Do you have a chronic illness? All those things will be considered in analyzing if you qualify for it. I tried to help somebody lately. He had a speeding ticket going at 100 miles per hour. Unfortunately, it was denied because the company said if he goes 100 miles per hour, he needs to
Ah,
himself within time, right?
because of speeding ticket.
I'm telling you, because of a speeding ticket.
Wow.
So this is what I would say, like America's baby, and in any economy is one of the prime accounts, and is completely free to apply at any age, but you still need to go through the qualification phase, which is if you don't have a physician, they will send a nurse at home to do blood tests, P tests, and so on. If you do have a physician, then they reach out to that physician to get your information, and then look also at the activities you do. Do you do any kind of speed car racings or rock climbing? Based on your activities, then they'll make a decision.
Wow, they're protecting their money.
They're protecting the money. That's exactly what it is.
Okay, okay, okay. So, my question now, Taiwo, what would you advise? What would you advise young African parents, like young Africans that just got married, and they're thinking of things like this? What would you advise them? Would you advise that they should look into this, or would you advise that they should just save more into their 401k? And for those of you who are in Nigeria, 401k here in America is like pension in Nigeria. So would you advise that?
Okay, good question. So the first thing I would say is that before when people consult with me when it comes to tax planning or things like that, I always want to understand their goals, their short-term financial goals and long-term financial goals. I also always want to understand their finances. Do they have enough cash flow to sustain monthly premium payment into this policy, right? So if that answer is yes, and then the next question is that if they have kids, I usually recommend that they have that policy versus a 529 because again, it has more flexibility for to be used for other things down the line through either a policy loan or through a withdrawal. So I
Sorry,
look
before we miss this, I know you said this before and I kind of forgot to ask you. What's a 529?
Okay, a 529 is a college savings account. Almost all states in the US have a 529 plan. It is run by different states, and every state have different benefits to it. I know when I was in Indiana, Indiana had a 20% credit for a 529 contribution up to a maximum of $1,000 a year. And some other states doesn't have a credit, but what they have is they have a tax deduction, meaning that if you pay money to that fund, you can take that money as an expense against your tax bill. It's a deduction. But the thing is that the effect is not so. Most of the concerns of people that have 529 is the fact that can I use it for any other thing? Can I withdraw it at any time? Prior to now, 529 used to be what it is, college savings. So you cannot withdraw it until your kids are at college level and you want to use it to pay college funds for them.
Hmm.
But the law is changing a little bit now to the point that now you can withdraw that fund earlier than the college level. But again, it's still kind of restricted. And so when it comes to comparing that to having a policy for kids, I think I really recommend. I'm kind of biased towards the life insurance because again, it has more flexibility. You can withdraw it at any time. You can use it for anything. In addition to the fact that it has that life insurance baked into it, so it's like you're getting two benefits for one kind of structure. So that's why I usually recommend that. And another thing I always look out for is that before you even go into this policy, I always want to ensure that to understand the financial position of that family. Are you able to, in terms of your cash flow, in terms of your expenses and all that, you have to look into whether it can be able to afford monthly premium because once you set that policy up, the monthly premium is going to go out like almost every month. So it's going to be taken up every month. The same thing for your child's policy as well. So before you even go into it, you have to understand that cash flow is not a problem for you finance wise. You also have to understand that when it comes to tax, yes, because some people would feel like, okay, I can take this off when I'm filing my taxes. I'm going to get the write-off. No, you're not. That's on your part. So what I recommend for people is that if you're just married or you have kids and you're still young, it's a good policy to look into because the younger you are, the cheaper the premium is. And then the younger you are, especially if you are elderly, like you have a higher chance of getting a good policy approval if you're younger. So before you get to that mid 30s, 40s, and all that, where different health issues begin to come up, it's advisable to set
Well,
up.
which age again did you say? Which age? No, secretary, am I up to
I
that
said
age?
before. I
Am I
said
up to
before
that
you.
age? Let us confirm so that.
I know. No, I'm saying that before you get to 40, you can't compare someone that is signing up at 20s with someone that is signing up in their 40s, right?
Yeah, yeah,
So definitely you can't compare it. So it's cheaper the younger you are, the elder you are versus when you're older and you have other health issues coming up.
yeah.
Right? And then of course the compound interest, right? So you have more ability to have more return on investment and growing that wealth.
Yeah.
So definitely a good policy, a good thing to look into. But again, I always recommend speaking to a specialist, a professional before you take that write that check or before you sign that policy.
Okay. We have two questions actually. This is from Angelis Green. Welcome to the show. I hope you're subscribed. And the person said, for a children policy, can I take out money for things other than college tuition? And then she also asked, and for the adult policy, can I take out money for things other than medical bills?
Yeah. So if you mind, like you don't mind, I can take this one.
Yeah.
So for children policy, and contrary to the 529 plan, the 529 plan, like Tayo said, is designed for college. And let's assume that Junior doesn't want to go to college. He wants to be the next Lionel Messi, or he wants to be she wants to be the next Beyonce, and so on. They want to do music. You cannot take out the money out of the 529 plan to finance that without a huge penalty. Let's assume that your son doesn't want to go to college in the state where you set up that 529 plan. You have to go to, you cannot transfer it to another state because it's usually designed for the state where it was set up in. And then the 529 plan also is tied to the volatility of the markets. One day you make money, one day you lose money. Contrary to the cash value life insurance that can allow the parents to set up a plan for the kids that grows without the volatility of the market in an index account, and the parent can take out money to do whatever the kids want to do. If the kids want to go to college, they can use that for college. Is the kids who want to do sports, they can use that for sport. The kids want to do music, they can use that for that. And then when a child has a 529 plan, and they want to apply for financial aid, this is one of the information they ask for. So if you have a 529 plan, you might not qualify for that. While contrary to the cash value life insurance that is not asked for during the filing for financial aid. So the elite kids still get financial aids plus the cash value life insurance. The parent can leverage for whatever they want to do. So this is the difference between the policy for kids and the 529 plan. But when it comes to parents, that you can use that policy and take out money to do whatever you want. If you want to pay out your house, you can. If you have enough cash value accumulated, somebody that I know used $100,000 out of his cash value life insurance to put a down payment on his house. From this book, The Money Wealth Life Insurance, from Jake Thompson, number one bestseller. Uh, Walt Disney used money from his cash value life insurance to build the first Walt Disney park, because at the
Wow.
time attraction park wasn't something safe, it wasn't clean, and so on. So when he went to see the banks to ask them to finance him to build a nice amusement park where families would be able to go, they couldn't see that picture. And the only thing that saved him was his cash value life insurance. So when you read this book, you can find out how the wealthy use life insurance as a tax-free personal bank to supercharge the saving. So you can take out the money to do whatever you want to do. Buy a nice Louis Vuitton bag for your wife. Yes, you can. Yeah. Buy for a vacation in Hawaii. Yes, you can.
Wow, wow, wow. Thank you very much. Thank you. I know that you guys are on social media and all that. I do not have Habib's social media handle, but I believe if you contact Taiwo, Taiwo will link you up with Habib. This is Taiwo's Facebook page. You can contact Taiwo at Taiwo Agbaje /CPA. Just contact her there, and she'll be able to link you up with Habib. So that I think they would actually do something like a team kind of thing where they would, come together and then talk to both of you, talk to you or you and your spouse, and then you guys will get the ball rolling. For me, hey, we're definitely going to do something. We're going to do something because it's very, very important. So my last question before we go, we're really pressed for time. This question is actually going to have to do with Habib and Taiwo, because Habib will talk about the insurance part of it, and Taiwo will talk about the tax side of it. So the question is this: can I replace my 401k with the life insurance that we've been talking about? Can I say, okay, you know what? Instead of putting 40% towards my 401k, I would rather put 10% or 5% and then channel the remaining 35% or 30% towards the life insurance. Is that something that I can do, Habib? And for Taiwo, will that have a tax implication on me? What are the tax implications on me?
So this is actually a very, very good question. Why? Because what we recommend to people is to factor the fact that for 1K, your money is subject to the volatility of the market. One day you make money. Now, Ukraine is fighting with Russia. Something that is happening on the other side of the world there. Panic in the markets, the money goes down.
Yeah.
You have no clue what the market's going to be 20 years or 30 years from now when your retirement time will come. And you pay about 2% on management fees to somebody to manage that account for you. I don't know for you, but if you have $100,000 in a 401k, 2% of fees is about $2,000. 30 years from now, it's about $60,000 of fees you
Wow.
pay somebody to manage
That's
without
wow.
knowing what the outcome of that account will be. It will be high or it will be low, like the story of my friend Bob. Now, you also have, so what we recommend people to do when it comes to the 401k, I know many companies contribute a certain amount.
Yeah.
So we want to,
Much.
yeah, they match. So it's free money. Who doesn't want free money? So we recommend everybody to contribute as much as your company is contributing. So you get the free money, which is free. You want the free money. And then everything else, if you were putting too much in your 401k, thinking that was the best entered revenue code. By the way, a 401k is a tax code. If you thought it was the best tax code that will allow you to retire, you want to look at the cash value life insurance.
Yeah.
Anything on top of what your company is matching, we recommend you to put that into what the elites do, a cash value life insurance that capture the gains of the markets when the markets go up and protects you against the volatility of the market so that
Mhm.
you don't have to worry about your old days. And on top of that, it also comes with living benefits. Anything happen to you, you get paid money while you are alive. You don't need to die to benefit. And if you were to go to be with the Lord, you also set your family forever tax free. The money goes to your family tax free. It bypass the probate court, which is the plan for America. When you die, they freeze your account, they pay all your debt first, and then the money goes to your family completely tax free. In America, depending on how much you leave to your children, the government comes for what they call inheritance taxes. Yes, you heard that right. Money you already pay taxes on, you put in your bank account, you think you are fine, you leave it for the kids. The government come for, they say they didn't work for it, so they need to pay
Mm.
taxes. So that's another loophole the elite use to leave a legacy. We call it the Rockefellers method because that's what they've been doing. And then you can leave money tax free from generation to generations.
Sorry, Taiwo, before you answer,
Okay.
um, for Habib,
Mhm,
just continuing. From my perspective as a healthcare specialist,
mhm.
um, that situation where someone is deemed not competent to take care of themselves, and then they put them in a group home, and then the government is able to assess your 401k, and they begin to take your money to pay for that. Can they do that with this particular insurance?
The good thing with the cash value life insurance, nobody can put their hands on your account, not even the government. The only person that can take out money about of that account is only you. And then if anything were to happen to you, the money will be paid directly, the living benefit will be paid directly to you. And then you decide what to do with it. If you want to pay bills with it, or if you want to retire on an island, whatever you want to do, the money is paid to you. This money is also creditor protected. So why do you think that people like Donald Trump have been able to file for bankruptcy 5 times and they are still billionaires? Those are one of the accounts they use. One of the last bill Donald Trump signed before leaving office was to double the amount somebody can put in this kind of account. This is when I knew that we see them signing.
There's
uh,
something there.
Yes, yeah, they know what that's what they do.
Mhm.
What they do. So definitely this account has so many advantage and it was leveraged by the elite for so many years until now that we have the information, and then we will be more than happy to help our community do the same, protect
Okay.
themselves.
So this last question from me,
Yeah.
you would answer, then Taiwo can pick it up from there, and then we can continue with Taiwo. This question is from all the gentlemen in the world today. They will want to know, all the gentle married men in the world today, can divorce touch that money? There's nowhere we're gonna hide that money. Uh-huh. Can divorce touch the money? Yes. Or
Can
no?
divorce touch the money? The
Yeah.
answer is no.
No.
Yeah.
The answer is no. The money
The
that you
gentlemen,
put
people are
there,
hearing.
you
That's
can't
what
touch
I
the
do.
money. And the money you put there is yours. Nobody can touch it. And you decide the beneficiary that you want to put. Some people can put the spouse as beneficiary, and then the spouse start misbehaving. They can change who they want the money to go to. Nobody has power over that account. This is why it's even used by companies. Companies put the money there. Do you know that a Bank of America has $19 billion in that account?
Wow.
And so many banks. Why? Because they know even if they file for bankruptcy, no matter what happened, nobody can go after that money. Why? Because it's tied to life insurance. Just the fact that it's tied to life insurance give them ultimate protection. Today they are called Facebook. They're getting a big lawsuit. They put the money there. They change the name to Meta, and they can
Mhm.
pull out the money. Today they are called Twitter. It's not going well. They change the name to X. They pull out the money. Today they are called Apple. Maybe tomorrow they are called Banana, and they put the money out.
Okay. Wow. Thank you very much. Taiwo, you want to take it from there?
Yeah, thank you. It's really been an interesting session. I'm really having a good time here. So, talking about the effect of pulling the money into pulling your money from 401k into this life insurance fund. The first thing I want people to understand is that 401k accounts could be pre-tax and post-tax. Now, when I mean pre-tax, a lot of people may get that confused. Pre-tax is the one that you've not paid taxes on that money, and so the plan is that you're going to pay taxes on it in the future. If you're pulling money from your pre-tax account, meaning the income, the contribution that you've not paid taxes on, if you're pulling money out of that into this insurance fund, it's going to have a tax effect, right? You're going to pay taxes on that. And you're also going to pay a penalty, because if it's an early withdrawal, there's a 10% penalty that goes with that. Typically for 401k, you're supposed to be about 59.5 years, almost 60 years before you can withdraw that money. Now, if you're taking that withdrawal before that age, you're going to get, in addition to the taxes, you're also going to get a penalty of 10%. So that's something you need to consider before you put that money into the life insurance, right? So the other part is your 401k is a post-tax, meaning that you have paid taxes on that.
Mm-hmm.
You're not going to get any tax implication. The only thing you're not going to pay taxes on that money if you're moving it to the 401k, to the life insurance, but you're also going to pay a penalty, right? For both funds, that pre-tax or post-tax, it does not encourage early withdrawal. Early withdrawal is going to attract a 10% penalty. But the difference there is that if that money you're putting into life insurance has already been taxed, the money you're putting in life insurance is not going to be taxed. Again, the interest, again, any interest, any return on investment that was generated on that fund will be taxed in addition to the penalty. Does that make sense? So when people are trying to move that fund, I always recommend at all times, before you even move your 401k, speak with your accountant first. That thing could be very, very detrimental to people. Like, it's crazy. I've seen people that will pull huge sums of money from their 401k into other ventures, and at the end of the year, they're going to face with this crazy huge tax bill, right? The other avenue that could be done, there is also, you could also take a loan towards your 401k. So that's a better alternative. If you feel like you need fund, even if you're trying to move it into this life insurance, is also kind of look at the other venues. Could you take a loan instead? Because that 10% penalty is something that
It's
um,
a lot.
really don't people don't like. However, if you feel very confident that this is what you want to do and you're ready to pay the penalty, you're ready to pay the taxes now, good and fine, move that forward. But you have to again consult with a tax professional before you do that. Um, is that I think that was the question.
Max, I want to add something to that, if you
Yes,
want.
please.
So just when it comes to the 401k, like she said, if you take out money, let's take an example. You have $50,000 in your 401k.
Mm-hmm.
You want to take out money of that 401k and put it into cash value life insurance. You have to pay taxes and penalty because you are taking it before the age of retirement. But if you have, what we recommend people is to keep contributing to the plan And then whatever they were contributing, if they contributed too much, let's say they were contributing like $300, instead of doing so, just contribute as much as the company is matching. If it's $100, and the 200, you can open that cash value life insurance. But if you want to move that $50,000 from the bucket that go up and down, depending of your employer, or if you have your 401k with your old employer, you can move it into what we call a fixed index annuity account, which does not trigger any tax or penalty. The funds will be moved from your 401k to the fixed index annuity account. And then the companies we work with will even give you 10% bonus from day one, completely tax free. And then the difference is you are moving your funds from a variable bucket to a fixed to an index bucket where there's no more volatility on the market. The only thing is it's not tied also to life insurance. So this is an information that I want, because I know some people already have money in the 401k and they don't want to pull it out and pay taxes and be subject to penalty and so on. So what you can do, not to worry about your retirement anymore, roll over that 401k into what we call a fixed index annuity account that grows by in an index captured against the markets. When it go up, protects you against the volatility of the market. The only thing is not tied to life insurance, but at least you don't have to worry anymore about the volatility of the market. And there's no penalty for that. And the
Wow.
companies we work with at this point even give you 10% bonus for doing so.
Wow. Thank you
I
very
also
much.
want to touch on that really briefly,
Yeah.
which is that technically, from a tax planning perspective now, usually when we're talking about tax planning, we're looking at folks that have more income and they are faced with this huge tax bill, and we're trying to up them save on taxes. And so when it comes to tax planning, um, we kind of help people to understand a good mix of whether they should opt for a tax deferred plan in that case, whether it's a traditional 401k or a SEP IRA or whatever the other retirement account. But the and that's why for us usually I always want to understand the goal of the taxpayer of the individual. I also want to understand the tax exposure they have before I recommend things for them. And so when it comes to choosing between these two, the first thing is definitely for them to contribute up to the matching for the company so they don't lose that company match.
Yeah.
And then if they have more money into putting into 401k or into putting into life insurance, before I make that determination, I want to see the tax impact, the taxes that they are faced right now. If, say, for instance, someone is going to pay $10,000 in taxes, and I know that if they contribute about an annual maximum. I'm sure you know that there's a maximum um, that you can contribute. So if they're able to contribute, let's say they're able to contribute $10,000, and that $10,000 is going to save them extra $3,000 on their taxes, and they don't want to pay that tax. They rather save on taxes now. I'll recommend they put money into the 401k. Again, for someone like me, I always want to look at the taxpayer situation, look at the overall scenario, and advise them based on my understanding of their finances, my understanding of their tax exposure, and their financial goal, short term and long term.
Yeah.
That's how I usually approach it to my clients.
Okay. Okay. Nice. We have a question, and the question is from Angelise Green. She says, since this policy is like a bank, can a business have this policy? Can I take one policy for my business, or is it only for people? That's a good question.
Yeah.
Habib, you can take that question.
So definitely a business can have this policy, and you will usually see small businesses that have key employees. So the business will have the policy, that will be the owner of the policy. And then one of the main employee, maybe the general manager, and that they want to keep, and they will usually put him as the insured, but they will own that policy by putting him as an insured. But you have many companies. This is one of the book that I recommend, Money, Wealth, Life Insurance. Many companies have this policy. Like I said, Bank of America has more money in life insurance than all the physical assets in America. Can you
Hmm.
imagine all the towers in New York,
Wow.
everywhere? They put more money in life insurance than the physical assets. And Chase Bank, JP Morgan, even Starbucks,
Hmm.
Pfizer, all those companies have money in life insurance. This is a little list. I don't know if people can see, but this is a book I recommend. Please, it's on Amazon.
Yeah.
Money Wealth Life Insurance: How the Wealthy Use Life Insurance as a Tax-Free Personal Bank to Supercharge Their Savings. And it shows how corporations can leverage life insurance really to make more money and also to keep key employees, their CEOs and so on. They will put the pension into that plan as long as the person stay 10 years, 20 years with them, and then before they vest the person with that. So companies can definitely have life insurance. It's not only for people.
So that means a person can
So,
have.
so,
Okay, go ahead, Taro.
so I just wanted to talk on that. For companies that have that plan, it's a good tax strategy because they're able to take that as a deduction on their taxes.
Hmm.
So on the company side, it's good. It's a win-win for both parties, I would say. So
Ah. Ah, and you didn't tell me. Oh.
have you signed up? You
Ah, you want
study
to expose me? You want to
fascinating.
expose me on live TV?
No, because I'm saying like you accused me like you really signed up. You not signed up for it. You just want to get more information and I understand perfectly. So
People can see her. She just came to our show and she's throwing us shade on the show.
I'm not doing that. You know I can't do that, but
Yeah.
yeah,
Oh,
because you've been procrastinating. But
Yeah.
hopefully,
yeah.
yeah.
So actually, that book Habib talked about is very, very cheap on Amazon. It's
Yep.
$7.99.
Mhm.
So go get the book, read the book. It's going to teach you a lot. It's going to teach you a lot. At this point, what do you guys have to say to our audience in 1 minute? Let's begin with Habib. What do you have to say to our audience in 1 minute? One advice you have to give them.
So in 1 minute, I just want to say, first of all, I'm really honored to be here, and we are in the mission of No Family Left Behind, which is educating our community. The elites in America and all around the world have been leveraging financial informations that are
Mhm.
not shared to the general public. Unfortunately, financial information is shared from families, is shared at home from generations to generations. While they'll be using those kind of account like cash value, life insurance, and so on to protect themselves, we have been using the normal Jangi, Susu, Wama, like
Mhm.
money, because that's the kind of information we have until somebody run away with the money, right?
Yeah.
What- so here you have access to the secrets of the elite, what people have been using for so many years. And while you are still healthy and life hasn't yet happened to you, is completely free to apply for these accounts. Now, getting approved is something else, but at least you can reach out to Taiwo and sit down with us one on one. Let's sit down with you. Let's look at what you need. Let's submit an application for you, and by the grace of God, you might get approved while you
So,
are still alive.
so what about people that don't get approved? What happened? Is there a
So,
second option for them?
So
What
people that
happened?
don't get approved, that's a very good question. We have many companies we work with. So based on your status, some people don't get approved with some companies because of their status. Maybe the asylum pending. Maybe they have a green card. Maybe they have a health condition. So we work with many companies. So based on your situation, we know the companies that are most likely to approve you. So if a company decline you, then we keep applying. We fight for you until we find a company that can give you the opportunity to have it. Now, if you can't have it at all, then we will go for the fixed index annuity accounts, at least to allow you to put money somewhere where you are not subject to the volatility of the market anymore, even if you don't have any the life insurance part of it. right?
So
So
I know a lot of people will want to know who pays you people. Is it us that will pay you or you will pay
So
yourself?
that's a very good question. So the companies we work with are the one that pay us. So the one-on-one time we spend with you is completely free. You will free time with you, free. It's free to design your plan. It's free to apply. It's only if you get approved that we get paid. If you don't get approved, you have nothing to pay us. Those companies we work with spend billions of dollars in advertising. Each time you hear advertising on TV, it costs a lot of money. So they don't mind sharing that advertising budget reversed when somebody gets approved. So this
Yeah.
is
Wow. Thank you very, very much, Mr. Habib and Taiwo, Mrs. Taiwo. Thank you very much. It has been an educational moment for us here in chatroom. We do appreciate all your insight. In fact, I will forward everybody's messages to you that will be interested. If you're interested in getting this life insurance policy, please just send. You can send if you can get in touch with Taiwo. You can send a message to us here at chatroom, and we will definitely send your message to them. The number is rolling down the screen. You can, and the email is also there. You can send your message straight up, and we would send all those informations to them. Okay. Thank you very much. It's been fun. It's been an educative moment. You will definitely hear from me and my friends. Definitely, so that some people will stop accusing us falsely that we have not signed up. We have not signed
Thank you so much, Mr.
up.
Max. It was a pleasure
Thank you, sir.
being here.
Ladies and gentlemen, it's been fun. It's been real. It's been wonderful today. We've had fun here in the chat room, learning about life situations, things that you can do to protect yourself, to protect your family, to benefit from life insurance while you are still alive, not just when you are dead. So please and please make sure you sign up. I am advising you sign up for it. See you next week, Sunday, as we will be coming to you with another interesting topic in chat room. Have fun and take care of you.